Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Schuller here at the New York Stock Exchange. Well, stocks are on pace to finish the week with gains. Comes after upbeat reports from NYSE-listed companies like Snowflake and Gap this week. Shares of Gap rose double digits in reaction to its latest earnings report. That retailer exceeded earnings expectations and raised its full-year guidance, noting a strong start to the holiday season. Its CEO also recently joined us here at the Stock Exchange on the trading floor. Earlier in the week, it was data giant Snowflake that reported better than expected results. Its stock had its best day ever as it also announced an artificial intelligence partnership. Well, as earnings season winds down, we're on the tail end. Most S&P 500 companies have exceeded expectations, and that has helped take stocks to new heights. Well, let's take a look at what is on tap in today's show. Behind stocks' recent rise is a broadening out of the rally here in America. Economist Joe Brusuelas is going to join me soon with more on how the new administration will impact growth. Plus, energy markets are in focus as we enter the winter months and the new year. John Tuff, managing partner of Energize Capital, will talk about where that money is going. And speaking of energy, Ultrapar, Brazilian energy store and distributor, is going to be with us live on the trading floor after that company celebrates the opening bell. Well, joining me now to talk more about the economy and thus the impact on stocks is Joe Brusuelas, Principal and Chief Economist at RSM. Joe, it's great to have you on the show.
Thank you very much, Kristen. Good. Thanks for having me on again.
We're happy to have you as always. And let's talk about the state of play here because several things have changed since we last spoke. Earnings season, of course, winding down, as I noted earlier, and definitive results for what Washington will look like going forward.
Well, you know, those earnings you mentioned to open the show are really benefiting from a very strong tailwind in the economy that's driven by two things: an incredibly robust labor market and a consumer that's now seeing wage gains above inflation that's translating to really strong spending. You know, the president-elect is going to inherit an economy that's in an incredibly good place. And one of the reasons why you are seeing the response you are in U.S. Asset markets is there's an expectation now that the 2017 Tax Cuts and Jobs Act is going to be rolled over and extended. Moreover, there's likely to be further tax cuts. The fiscal expansionary policies that the Trump administration are going to pursue, at least in the near term, will juice both asset markets and likely provide an additional tailwind to an already strong economy into 2025.
What does that mean for growth in the next 12 months?
Okay, so we have a growth rate in our forecast right now. It's 2.5%. Now, it's well above the 1.8% long-run trend. And let me tell you, when you compare it to our major trading partners inside the G7, the U.S. is going to have another year of outperformance. Now, because of the additional light regulatory touch the Trump administration figures to have, we're going to get a lot of churn. There's going to be mergers, acquisitions, lots of fees and deals. So you're going to see a lot more risk appetite on the table. While our base case is 2.5%, we attach a 55% probability to that for next year. The alternative to the base is no longer a recession. It's the economy outperforms and grows above 3%. We attach a 25% probability to that. So my sense here is that we're going to be between a very good economy and one that's just firing on all cylinders and looks very robust in 2025.
Very good, I think, for our viewers to hear, Joe, especially heading into the holidays. And Gap noting that to some extent in its earnings report just yesterday. I want to talk to you about tariffs because, of course, that was one of incoming President Trump's campaign promises. How are we see companies, the economy starting to prepare for potential tariffs?
All right, well, there's three big things I think we want to remember here. Is first, you know, on Wednesday morning, right after the election, our clients started calling us to ask what should we do because they were burned last time by thinking these were just negotiating tactics.
I see.
They're not. Trump is going to impose tariffs probably on January 21st on the Chinese and their supply chains. So we're telling firms to pull forward as much activity from 2025 into the current quarter and the first month of 2025. I think that's a very prudent move. Second, we're urging, and our clients are clearly thinking about diversification away from those supply chains back into the U.S.'s currency block, its trade zone here in North America, or the United States itself. Now, on the tariffs, we do not expect a 10% across the board or 20% across the board on day one on all goods. I just think that's not in the cards. What you're likely to get is somewhere between 20 and 60% tariffs placed on the already 25% that on select number of goods from China. That's really where the tensions and the conflict is going to be, we think, for the first half at least of 2025.
Interesting. So it would have some impact, even though it sounds like, even accounting for the tariffs, you still have a very positive view on economic growth in the next 12 months.
The growth is so strong that it's going to offset the drag on firms that have to pay higher import taxes on goods they import from those Chinese supply chains. Now, remember, you increase import taxes, they're paid at entry. Those firms are going to pay them. Then they have to accept either thinner margins or attempt to pass as much along to downstream to customers as they can. The Chinese don't pay for them, okay? That's really important that we state that at the outset. Now, because consumers are very price sensitive, only in our own internal data, only 50% of our clients indicate an ability to pass along those costs. So that is one of the risks going forward next year. And then lastly, you want to watch currencies. Currency volatility, specifically the Chinese yuan, if that depreciates, it offsets those costs. And then we get into some more dicey, dangerous territory.
Joe, very good to know. I also want to talk about what this means for the Fed's policy, a key story that we cover on a day-to-day basis, of course, here at the stock exchange across various different asset classes. This morning, I had seen that traders betting of a 59% chance of another 1/4 percentage point rate cut in December. Do you think the Fed delivers on that?
I think they do, but then they slow down in the first quarter of next year. You know, by the time they have their March meeting of next year, they're going to know where tariffs are at. They're going to know where fiscal expansionary policy is, and they're going to be able to make an assessment about the inflation risks. Now, right now, we don't expect much of a problem on inflation in the first half of next year. But if it does look like price levels moved up, inflation's picked up again, the Fed may have to reassess the number of cuts. We have 75 basis points of cuts on the table for next year, but we think 50% really is, or excuse me, 50 basis points is really a risk. Now the market has not quite priced that in yet. So again, that's just something that we're going to want to watch closely, and that will impinge on asset prices in 2025.
Talk to me more about that, because for our viewers who do follow the stock market regularly, how could they see that show up in asset prices like stocks?
All right, so what you want to do is you want to look at two things, the Fed futures market and the overnight index swaps. That gives you a sense of where investors think Fed policy is going. If Fed policy gets less restrictive, then asset prices will tend to go up. If it's less restrictive than expected, then asset prices will flatten out or could conceivably drop, depending on the nature of the risk to the economy and the inflation outlook.
Joe Brasuelas, he's so good, he's going to join us again here just after the market opens. He's a principal and chief economist at RSM. Joe, thank you. We'll see you soon.
Thank you.
All right, well, stay with us, because up next we'll dive into the world of entrepreneurship with the CMO of Endeavor. She's going to tell me how her company is giving founders in emerging and underserved markets a boost. Stay tuned. So, John, tell us a bit about the partnership you have with Santander and Openbank.
It's a Spanish man and it's a Spanish company. This is my only Spanish partnership. Santander has a long history with the game of golf, and being a professional golfer, it's a true honor to be a part of it. And then, well, we're here at the New York Stock Exchange for the opening, the soft launch of a new online bank here in the U.S. being Openbank.
Now, John, when deciding which brands you partner with, what factors do you consider?
I try to get brands that represent me in some kind of way, right? And trying to, at least having the opportunity to partner with somebody from Spain, a family that grew up in northern Spain like myself, not the same city, but close enough, that has a close history with the game of golf. I thought it was a no-brainer, right? They've also been involved in other sports like Formula One and many others. I think that was an easy choice, right? But I think every brand I've had, I try to see what their expertise is, what their motto is, and what they portray to the world, right? And that's what I try to link myself with. So my image in itself, or what is the name, John, is either uplifted by those brands or related to those brands, right? And I try to be picky. Luckily, I've been able to have some great partners to join with and keep on going on those ventures.
Now, Santander is growing in the US market, which is a journey you yourself are familiar with. Do you see any parallels between your own experience in the US and what Santander is doing today?
There is a difference when you're playing in different parts of the world. The golf courses are different, the setting is different, right? So to be as complete a player as you can be, you have to play in all different environments. And coming to the US is a massive one, right? 3 of the 4 big majors are played in the US, all the big events are played in the US. So being able to come here.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, Endeavor is on a mission to build a thriving entrepreneurial ecosystem in emerging and underserved markets around the world. The organization, established in 1997, is a global community of by and for high-impact entrepreneurs. And the company says it operates in more than 40 countries and has helped 2,600 entrepreneurs. Well, Endeavor Global Chief Marketing Officer Silvia Cavalcanti joins me now in studio. Silvia, welcome.
Thank you. Thank you.
We're happy to have you. What's on your radar in the investing space right now?
Look, usually the question that we are oftentimes asked is why invest in emerging economies? And when it comes to that, there are many reasons, and there is a combination of financial upside and, frankly, the opportunity to drive real, meaningful change. Mm-hmm. So when it comes to the financial upside, I would say that we are talking about where the next wave of innovation and growth will come from. Mm-hmm. They will come from emerging economies. We're talking about countries which have, in essence, leapfrogged the legacy infrastructure and are already adopting digital solutions at scale. Mm-hmm. So if you think about Africa, for instance, in Africa, mobile payments is the norm. That's pretty impressive, And we're also talking about places where, more often than not, you have large, young, tech-savvy populations, a huge opportunity. And what fascinates me the most, frankly, is that these entrepreneurs, mm-hmm. the caliber of these entrepreneurs are unmatched. Mm-hmm. So, when you think about entrepreneurs in emerging economies, we have, they're dealing with hyperinflation, devaluation, shift in government policy, and all sorts of crises, mm-hmm. social, economic, political crisis. Mm-hmm. So in that, this is just another Monday for them. Mm-hmm. So if we think about entrepreneurs in emerging economies, I would say they basically epitomize resourcefulness, yes. and resilience.
Yes. It's great to see that, of course, in a lot of these emerging markets around the globe. Sylvia, I'm curious how Endeavor, yes. the firm that you work for, is supporting these entrepreneurs.
Very good. So let me take a step back, if you will, to contextualize. Like 27 years ago, Linda Rothenberg, our fearless leader, co-founded Endeavor, this global community, as you mentioned, of, by, and for high growth, high impact entrepreneurs outside of Silicon Valley in China, or as we like to say, entrepreneurs from elsewhere.
Yes.
And the mission back then, and still holds true today, is to build thriving entrepreneurial communities, build thriving entrepreneurial ecosystems where, in places where entrepreneurship abounds, yet the conditions for those entrepreneurs to thrive are not necessarily there. And by that, I mean not only access to capital, mm-hmm. but access to mentors, to right. role models, access to a network of peers, mm-hmm. and and trust, So that's why Endeavor was created. Now, what do? What we do is we identify, we select, and we support those high growth entrepreneurs in their journey to scale. And that's a very important part, what I'm going to say. We do that while ensuring that they stay connected to their local ecosystems, right? So we help them scale and expand globally,
Yes.
while also giving them a platform to pay their success forward to the next generation of entrepreneurs. So if you think about it, we help them go big and go home,
Yeah.
if it makes sense.
Yeah, just quickly, Sylvia, we
Yes.
only have about 30 seconds left. I'm just curious in terms of how you define success. Obviously, scale,
Yes.
as you mentioned, is very important. But when you look at entrepreneurship as a whole, what do you recommend as a good outcome to the companies that you work with and the entrepreneurs that you work with too?
Yes. Look, our entrepreneurs, they more than scale their companies. They multiply their impact by paying their success forward to the next generation of entrepreneurs, mentoring, training, and investing in the next generation of entrepreneurs. So creating what we call the Endeavor multiplier effect. And if we think about the definition of success, it has historically been defined by growth, profit, and valuation.
Yes.
Yet, in our case, when we look at our Endeavor entrepreneurs, we know that they truly experience success when they multiply their impact. So there is a huge opportunity for us to redefine entrepreneurial success by measuring the impact that entrepreneurs have in their ecosystem.
Sylvia, so wonderful to have you here on the show today, live at the New York Stock Exchange. That's Sylvia Cavalcanti. She's the global CMO of Endeavor. Thank you.
Super.
All right, well, stay with us because up next, one VC firm is providing sustainability-based firms a path to success. One of the firm's partners will join us after the break.
Since we last talked, I know you have a major announcement. You just made the largest deal in the ASPM space. So talk to me.
Application Security Posture Management market, yes.
Yes. And I understand that it's with an NYSE listed company. We can't say the name.
Fortune 10.
Yes, Fortune 10 company. Tell me about this deal.
First and foremost, this is a deal that changes startups, okay? And we're super, super excited about it and why they decided to partner with us for 3 years. Very large deal was technology that we developed. We actually helped them automate all their security risk assessment questionnaires, build a real-time software inventory, and prioritize, remediate, and prevent risks before they get to the cloud.
Let's talk about how Apiro recently launched the risk detection at the design phase. Can you talk to me more about this and how earlier detection in the software development of these kind of problems will help enhance the security outcome for businesses?
Based on NIST, the cost of fixing a defect at runtime when it reaches to the cloud, 100x more than in the design phase. So what we did, we developed our own private LLM model that scans every feature requests that gets into the development lifecycle. And automatically, we generate threat modeling, stories, mitigations before one line of code is written.
I do want to talk to you about a new product that I know that you are going to be unveiling soon. Can you tell me more about it?
I can't share all the details, but I will say the following. We're using the Apiro deep code analysis technology to identify our software architecture. The next phase is to visualize your software architecture in a very, very interesting way. It's like a living and breathing organism. It changes every day. So you need to visualize it to help developers write.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange. VC firm Energize Capital has its sights set on a greener future. Here's some fast facts about the company's operation. Energize Capital is a climate software investor looking to empower the new energy economy, aiming to accomplish this by investing in early-stage startups and mid-stage growth equity firms. Notable limited partners include NYSE listed companies like General Electric, Caterpillar, and WEC Energy Group. Juan Muldoon, partner and co-head of ventures at Energize Capital, joins me now. Juan, it's great to have you on the show this morning. We've been asking many of our guests in the wake of the election results a few weeks ago and the wind down of earnings season, the state of play in their specific market. How do you see what's unfolded in the past few weeks impacting the space that you invest in?
Thank you, Kristen, and good morning. Thank you for having us. First of all, I think that the energy transition will continue, not just because it depends on one political party's rhetoric or positioning, but because it makes economic sense. And I think if you see what the incoming administration is going to do, it's going to align very well to that. In many parts of the US, and frankly, all around the globe, technologies like wind and solar and batteries actually today provide the lowest cost of electricity production. And we actually see those costs continuing to fall with greater technological advances. So while there's been a lot of rhetoric about how government support will change, we actually see that it's going to be very well supported by fundamentals. And many of the benefits that we've seen from the Inflation Reduction Act and other initiatives under the Biden administration, we expect will continue because they actually benefit all Americans through job creation and lower energy prices. And so while the rhetoric maybe has increased around the direction of the energy transition, we actually don't think it's going to change dramatically. And we're very excited about the opportunities ahead.
Juan, what are some of the specific companies or founders in this space that you're following?
Yeah, great question. So at Energize, we focus mostly on capital-light solutions that are driving the affordability, the reliability, the security that is driving the energy transition. We invest in companies around solar software, for example, that is helping to reduce some of the soft costs associated. Similarly, in batteries, we actually have several investments in the battery ecosystem that can help optimize these systems and these assets at scale. And several investments that maybe have been born outside of the energy industry, but are actually incredibly important around cybersecurity and other ways that we can continue to optimize our energy and industrial system.
I want to get your take on how the companies that you work with and invest in are preparing for a new administration, notably when it comes to tariffs. An economist joined me earlier in the show saying that some companies are moving up orders so that they don't potentially get hit with tariffs down the road. I want to hear more about the supply chain of the companies that you work with.
I think there are definitely going to be challenges. The energy transition, frankly, has never been for the faint of heart. And beyond the rhetoric, maybe, but perhaps no surprise, we do see some uncertainty around support and incentives, particularly around tariffs. So around tariffs, the energy transition supply chain is heavily reliant on China today. That is changing very, very quickly as companies are building out new manufacturing capacity for energy components here in the United States. There are several manufacturing facilities being built for US-made solar panels, for example, in Ohio and Texas and elsewhere around the Rust Belt. And so the energy industry is working very, very hard to diversify its supply chain and to strengthen its supply chains here in the United States.
What's the adoption timeline of one of these new and emerging technologies in the energy space that you're investing in?
It depends. So, where we focus really is on companies that are working with technologies that are already de-risked, so they're already viable from a technological perspective, and they're also viable from a commercial perspective. So, again, think wind, solar, batteries, electric vehicles. So, while the technical development cycle for net new technologies could be measured in decades, once you get to that place where it's cost competitive, you see a very, very quick S-curve for adoption, like, for example, what we're seeing in electric vehicles. Which here in the United States, despite all of the rhetoric, sales have continued to climb.
I do want to talk about deal activity because we are expecting, at least in the publicly traded market, more deals to be happening, mainly due to deregulation and looser restrictions, if you will. But of course, in your space, some of it might rely on borrowing costs as well. And we follow that Fed funds future rate so closely because of that. What more can you tell me in terms of the amount of deals and deal size that you expect?
Yeah, absolutely. We actually agree with you that rates are going to be the better driver or the better signal, I should say, about deal activity. And we expect 2025 to be very busy. We think that a lot of the companies that we invest in that are at scale and also profitable are going to be potentially very attractive candidates for the M&A markets and the public markets when they open up. So we see deal activity, at least for the companies that are at scale, increasing. Now, I will say, a lot of the rhetoric has maybe driven away some investors in our area, which we see as potentially net positive for the ones that are going to endure.
All right, Juan Muldoon, partner and co-head of ventures at Energize Capital. Juan, great to see you this morning, and thanks for joining.
Thank you for having me.
All right, well, the opening bell is just moments away. Stay with us on NYSE TV Live.
Brett, we're here at the New York Stock Exchange. You're here with the Startup Challenge by Snowflake.
Yes.
So tell me, what were your key takeaways from this competition, and how do you see these insights influencing Big Geo's journey forward?
It was incredible being down there for the Snowflake Startup Competition. It was really encouraging to see where they're going with their ecosystem, and what they're doing with native apps specifically is where we're kind of going to market with them. And the support network for me was the biggest takeaway. It was once we met with them and we were like, we're going to work together, it was just everybody piled in and we got the job done. So I was very encouraged, and I know Brent can speak for that as well. It was knowing that we picked the right ecosystem to go to market with. Snowflake was that for us.
Now, Brent, the data center and cloud landscape is evolving rapidly. How does Big Geo's technology align with the future of data centers? And what role do you envision for your company in this transformation?
It's an incredible technology for the data center space. I mean, we're having these conversations on a daily basis with some of the world's largest hyperscalers. Our technology sits right up against, it's built on first principles solutions from the ground up to increase performance at the data center. So we're looking at this technology as a way to reduce the amount of electricity consumption for data centers when it comes to geospatial performance, which is vastly becoming or quickly becoming one of the largest computing workloads at the data centers. So it's a very important technology to align with our hyperscaler partners and give them more, save them on electricity so they can spend that on artificial intelligence. So,
all right, now, Brett, we're here at the New York Stock Exchange.
It's
You're
awesome.
on the trading floor.
It's awesome. I've seen all the movies.
Well, tell me, how does it feel to be here? And how does this experience align with Big Geo's goals and vision?
Well, first of all, it's great.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange. Well, in just a few moments, NYSE listed Ultrapar is going to celebrate the opening bell to kick off today's trade. The Brazilian-based firm, which operates in the energy and logistics infrastructure space, is here to celebrate 25 years as an NYSE-listed company. That is something to celebrate. Ultrapar's notable subsidiaries include Ipiringa, Brazil's second-largest fuel distribution company, Ultra Gas, the largest liquefied petroleum gas distributor in the country, and Ultracargo, Brazil's largest bulk liquids storage firm. Well, speaking of Brazil, the country has a noticeable presence within the NYSE community. As of September 30th this year, 26 Brazilian-based companies list here at the exchange, with a combined market cap of about $437 billion. Now, the NYSE has a 96% market share among Brazilian companies based on total market value. And today's bell ringer, Marcos Lutz, joined Ultrapar in April 2021 as a member of the board of directors. In January of 2022, he was named Ultrapar's CEO. And later in today's program, after that opening bell, we'll be joined by Lutz and Ultrapar CFO Rodrigo Pizzinatto about the significance of the anniversary and what is next for the company. All right, let's take a look here at markets, pre-market, of course, as we are getting ready to open trade here on a Friday. We are looking at gains for the week. The S&P on track to rise about 1.3%, some better than expected earnings, certainly from NYSE-listed companies like Gap and Snowflake helping there. Here's a live look at that opening bell podium, and let's take a listen as we await the market open. All right, we are off to the races for trade on this Friday here at the New York Stock Exchange. And rejoining me now is our expert on markets today and notably the economy, Joe Brasuelas. He's a principal and chief economist at RSM. Joe, welcome back.
Thank you.
We're officially open for trade, and I want to revisit actually some of the European data that we got overnight in terms of what it is saying about that particular market.
Well, it would appear that the European economy is being pulled back down into recession. You know, demand for services literally just dropped off the charts this morning. And so what that did was it caused a really big move in the euro, which fell below 104 this morning. You know, I think as we move forward here into the new year, we're going to test parity against the dollar. That's got to do with a lot of things, not just European weakness, tariffs, and the growth and interest rate differentials in the United States. But we not only just saw it there, you saw the spread between the benchmark, US and German 10-year yields really began to blow out. And now this is important out there. If you're a financial markets person, you're trading, these are the things that you want to know. A little inside baseball for everybody, but you have to be aware of it. The five-year forward inflation swap in Europe moved back to 2%, and again, it just fell off the cliff this morning. What that means is global investors are now pricing in real problems in Europe and problems over in Asia. So, you know, in many ways, what you're going to see next year, Kristen, is a continuation of capital inflows into the United States. Now, I got the killer statistic for you this morning.
What is it?
All right. Capital flows into the U.S.
Yes.
is greater than the sum of the next largest 12 economies.
Wow.
Yeah. And the U.S. is going to act like a magnet for global capital going forward on all of those things that I mentioned, plus the fact that we're going to get another round of fiscal expansionary policy out of Washington under the new Trump administration. So, you know, if you're out there and you're trading, liquidity is going to be plentiful next year. It's going to be looking for greater returns on investment. That's why we get Ultrapar here at the exchange today, because they want to be a part of that to fund their own domestic and global exploration needs.
Thank you so much for making that connection, Joe. You're so good at that here in terms of how it matters for us, especially in the United States, all the pieces around the world. I am curious in terms of what we can expect to unfold in the U.S. economy, bringing it back home here. Of course, labor and labor costs is another factor that would be good for us to talk about as we talk about the jobs market and what it means for corporations going forward amid the changes that we'll see in January.
Okay, so the U.S. labor market really remains tight by historical standards. But we have a demographic issue. 11,000 people are retiring a day. We just don't have enough native-born population to fill the jobs. Over the last 4 years, we've imported labor, right? But we're going to now turn towards a much tighter immigration stance. And one of the things we're going to want to watch closely, that unemployment rate's at 4.1%. Should unemployment really should labor, net immigration really be choked off, we would then look for the unemployment rate to fall and wages to begin rising again. You know, we barely missed a wage price spiral during the post-pandemic price shock. Mm-hmm. Okay, because we're just going to have a different policy going forward, this is something that firms will want to watch. Mm-hmm. You know, if you're owning stock, what's the rule of thumb? 70% of costs are directly related to labor. You begin to get a shortage in labor, especially in areas like construction, agriculture, leisure and hospitality, just to name a few. You're going to want to watch those valuations going forward due to the policy shift in Washington, and that is going to be one of the bigger risks. Now, we don't think it's first half, or really even third quarter of next year. It's the very end of next year, and then 2026, where I think you and I may be having a very different discussion about the risk matrix around inflation in the economy and also to equity valuations.
We will certainly be turning to you then, Joe, as we always do, for your insights on the economy. I am curious to get your take from an economic perspective about the complete rip that we've seen in cryptocurrency, specifically Bitcoin, as that crypto does approach $100,000 a token. What is the right way to look at it from an economic stance?
All right, so there is no economic rationale or value for Bitcoin. It's a highly speculative asset. We have assets like that all over the economy. And if you want to play in that market, if you're willing to take all your risk capital and lose it, then it's appropriate that you do so. Now, my sense is as we approach 100,000, this is beginning to look a lot like another speculative bubble, right? Where you're really taking some risk, and we're going to be in high volatility territory, which Bitcoin always is. You know, over the years, Bitcoin started out as a potential substitute for the dollar. Now, Bitcoin's now predicated as the benchmark or the base to which much of the different coins are priced or tethered. So we still have yet to understand what moves this and why, other than speculative activity, which it looks like it's linked to, again, possible policy changes in Washington at the turn of the year going forward. But you know, again, it's a highly speculative asset that's one corner of a highly liquid market, right? And to put it in perspective, if there's a $2 trillion liquid Bitcoin market, okay, that's fine, you want to respect that. But it pales in comparison to the $6 trillion a day churn in currency markets, and of course the over $30 trillion a day churn in the bond market, not to mention what goes on in equity markets. So we always want to put that in perspective, I think, out there, that it's a highly risky corner of the investment industry.
Always good to get your perspective, Joe. We so appreciate it. That's Joe Brasuelas. He's a principal and chief economist at RSM. All right, well, after the break, we'll break down some ways that you can save this holiday shopping season. These are going to be great tips. Stay with us.
What you need is the commitment of all the employees that it's a priority, that we value culture, that it's a differentiator, that it helps us better support our partners and our customers. And I think all 20,000 people truly believe that. And so we're focused on it. But you have to be willing to change too.
Yeah.
And, you know, that's always one of the challenging parts. When you think you have a great culture, it's easy to say, okay, let's just not break it.
Yeah.
But if you just say that, you say, let's just not break it, okay, then you're not evolving, right? And the world around us is changing every day. And you have to respond and react to that. And that means you have to do that for the business and respond to those external dynamics, but it means you have to do it for the culture as well.
Yeah.
You know, we've been through a very difficult few years as a country, and that means that you need to support your employees differently given those circumstances. But I'll tell you, it's really important to listen to that cohort, because their needs and the pressure that they're under is very different.
Yeah.
And that's where I think, you know, we add a lot of value. And we add a lot of value to those partners, even outside of the credit program. Like, we can actually help them on other topics, you know, HR, finance, you know, other things that we do where we have a more established process will help our partners. And we do that just in the spirit of partnership. But it means a lot to that group, because they do have a totally different set of demands. And one of the things we did in the reorganization is we realized that a lot of what they need and a lot of what we needed to do to support our partners was common across industries. The customer experience has never been more important than it is right now. There is very little friction.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here at the Stock Exchange. Well, the holiday season is always fun and festive, but it can also be costly if you don't adequately prepare. As shopping lists get longer and consumer appetite grows with events like Black Friday and Cyber Monday approaching, it can be challenging to find time to actually sit down and map out a budget plan to get the most bang for your buck. Well, fortunately, my next guest, money-saving expert Andrea Wurok, joins me now to talk about all the best ways to maximize our holidays. Andrea, it's great to see you as always. And for our viewers watching, what is the best way for them to set a budget this holiday season?
Good morning. Thanks so much for having me on. Yeah, when you're setting a budget, I think most people think about gifts. It's a no-brainer, or maybe for the travel expenses you're planning to take on. However, you have to think about all those smaller seasonal expenses that can creep up this time of year. Otherwise, that's what's going to bust your budget, cause you to take on debt. So a good place to start would be looking at your credit card statements, maybe from last year. What are those common seasonal expenses you typically pay this time of year? This could be tips for service professionals, maybe extra groceries for holiday feasts, or if you're hosting out-of-town guests, postage, greeting cards, family photos, the list goes on. And this is a good time then to figure out where you need to cut back, what's really not that important, and maybe also reduce your gift spend as well. Maybe set those gift expectations with family and friends, focus just on the kids, or do a Secret Santa exchange. So you really only buy one present rather than a bunch for the big group.
I think setting those expectations, having that gift talk, Andrea, as you referenced there, is so important for people who are looking at their credit card balances and not liking the number that they see there. Are there ways that they can try to mitigate that this holiday season?
Yeah, unfortunately, there is a large percentage of consumers going into the holiday season with debt. In fact, a survey from creditcards.com says 1 in 3 consumers plan to go deeper into debt to afford the holidays. So one move you could do is transfer your credit card balance. You can move your current balance to a 0% balance transfer card. This would buy you time to get through the holiday without those additional interest fees racking up. And then in the new year, commit to a debt repayment plan to pay off that balance before that 0% interest expires.
I gotta tell you, I feel like one of my hobbies has become deal shopping, Andrea, and your tips over the years have always helped me navigate these important times. What's a good way to think about rewards and take advantage of some of those free rewards this time of year?
I mean, there's so many free rewards that you can earn through credit cards, retailers, and even various savings tools like cashback apps and browser extensions that give you free rewards, and then use those rewards towards your purchases. So here, let me give you a couple examples. Make sure you're using a robust cashback card that gives you money back for the stores you shop at or the categories you spend the most on. I like a flat rate cashback card. The Bread Cashback American Express card offers an unlimited 2% back at every store. So whether you're shopping at Target, Walmart, Sam's Club, this will help you rack up more cash back for all your purchases and then use that to pay off your purchase. You can also download a browser extension called Fetch Shop. And with Fetch Shop, you'll earn points for every online purchase at their partner retailers. In fact, they say you can earn up to 2 to 4 times those points during Black Friday to Cyber Monday. And then those points will accumulate and you can redeem them for gift cards to Target, Amazon, many other stores, and then give those out as gifts or use them to supplement your purchase. And then, of course, sign up for those free loyalty programs offered by retailers. I mean, there's Gap, there's Kohl's, Old Navy. These stores give you cash back for your purchases in the form of store rewards. And then you can use those to pick up extra gifts and not put more balance on your credit card.
What is the best way to navigate some of your monthly bills if you are paying perhaps for recurring subscriptions to really make sure that the budget is nice and tidy?
Yes, and in fact, you could even uncover some extra savings here to put towards your holiday spending budget. A lot of consumers are living paycheck to paycheck and feel like they can't afford the holidays. But if you hack a few monthly bills, it'll give you some more budget or wiggle room to put towards the holidays. So a couple places to start. Cancel those unused subscriptions like you mentioned. If you have any memberships right now that you really don't need, you can pause them. Pause them for a few months. You can always add them back in the new year. And then also review your data plan. I came across a study that I thought was really interesting. 90% of consumers who pay for these pricey unlimited data plans are actually wasting money because most of us use a lot less data. You could switch to a lower tiered plan. I mean, we hook up to our home Wi-Fi or Wi-Fi at the office. Or go to an online-only wireless carrier. I like Mint Mobile. They have a lot of really affordable plans. They even offer deals during Black Friday. And if you have kids on your big family plan, switch to Mint Kids. They just launched it. It's $15 a month. You get unlimited talk, unlimited text, and 5 gigs of data. A great way to save on those bills.
What about gift cards? If you have gift cards, what's the best way to use those?
Okay, so first of all, look for those promo gift cards right now. I saw stores that give you a free $10 gift card when you buy $100 worth of gift cards. There's even restaurants offering these types of deals. That promo card can then be used for an additional gift to give to somebody. So you're buying gifts for free essentially, or you can, add it to the gift to give something a little bigger. You can also find discount gift cards through warehouse club stores. Costco, Sam's Club, they sell gift cards for up to 30% savings, and we'll see bigger discounts during Black Friday, in fact. And then if you have any gift cards that you aren't using, maybe partially used gift cards, or you got a gift card to a store you just don't shop at, you can sell them for cash. There are sites that will buy your unwanted gift cards. They'll pay you up to 92% of the value. And hey, having that cash is much better than wasting funds on a gift card you don't want.
Andrea Warrock, great to see you. Money saving expert Andrea Warrock. Thank you so much and happy holidays.
You too.
All right, well, earlier this hour, NYSE-listed company Ultrapar rang the opening bell to celebrate 25 years as a listed company here. And now I want to bring in my colleague, Judy Shaw, who is on the trading floor with two very special guests. Good morning, Judy.
Good morning, Kristen. Two very special guests indeed. They just rang the opening bell to celebrate the 25th anniversary of listing on the New York Stock Exchange. Joining me today is Marcos Lutz. He is the CEO, and we have CFO Rodrigo Pizzinatto. Marcos, Rodriguez, wonderful to have you both here. Congratulations.
Thank you.
Thank you, Judy. Thank you very much.
So Marcos, 25 years of listing on the New York Stock Exchange. What does it mean to be a listed company on the NYSE?
I mean, it's super important for us. I mean, we went public simultaneously in Brazil and in New York. The partnership with NYSE is an amazing one. It's been a great ride. Even with hikes and volatility in Brazil, we could access international investors. We could actually develop an investor base in not only in New York but globally. We develop a lot our governance through benchmarks, so it's been great. It's been great, and it's nice having us here again, ringing the bell, and after 25 years.
Rodrigo, tell me, how has Ultrapar contributed to the Brazilian economy?
Okay, we have over 87 years of history in Brazil. We have about over 10,000 people working with us to provide energy, fuel. We also have LPG and infrastructure, logistics, now with a new company called Hidrovias in the rivers in Brazil.
Marcos, talk about Ultrapar's track record and how your portfolio contributes to your results.
Well, we have a very strong track record in governance. We were pioneers in many minority shareholder rights, and I think this posed to us an important responsibility. We've been investors of multiple companies. We divested recently from two large companies, one large chemical company that was historically with us. We reorganized our balance sheet. We are super prepared for a more volatile world that we are facing today. Interest rates went up, so this poses a strong push on market caps and valuations of companies. But again, we are very, very happy with the situation we are today. Our track record in again, the Brazilian development and in delivering better lives to Brazilians, to develop, let's say, remote regions in terms of infrastructure, fuel supply, energy supply. We're moving to renewable energy as well with solar panel energy, and we also are developing the biogas supply to B2B consumers in Brazil. So it's been a great track record, 87 years, starting from an LPG distributor 87 years ago. At some point we had more than 30 companies, and now we are back to a more focused approach, 4 companies, and we're again very organized for the future.
All right, and Rodrigo, we have about 30 seconds left. Tell me, what are the company's priorities for 2025?
Okay. We just acquired a new company called Hidrovias. In 25, we need to integrate this company, build this company, start to expand this company after some time. For Ipiranga, it's a year to expand the network, expand the infrastructure. For Ultracargo, it's the largest investment in its history, so we need to start up the new operations. And for Ultragaz, it's starting new energy, scale this new business environment. Yeah.
All right, well, exciting times ahead in 2025 for Ultrapar. Thank you both for joining me. Kristen, back to you in the studio.
Judy, thank you so much joining us live on the floor, of course, with the bell ringers. We so appreciate that. Well, after the break, we're going to set the scene for the upcoming Sale GP season, including a key partnership. Stay with us to learn more.
So we're not following a cuisine, we're actually really leverage the culinary art form of churrasco, which is very traditional Southern Brazilian cuisine. We've been doing it for 45 years. So you're right, we only have 72 restaurants in America, but 96 globally. But our whole essence of our brand is about scaling the authentic culinary art form that we know our guests love around the world.
When it comes to cuisine, there's many different trends out there, right? Especially as people are more health conscious these days. So how are you keeping up with these trends, but still being true to your brand?
What we love about it is everything we serve is nutrient dense and good for you. So it's up to you and your diet and how you like to dine, but we've done that for 45 years. What's exciting is our innovation around that is even getting better. We've just rolled out whole branzino seafood, so we're just now beginning the fresh seafood platform, and we're really excited about that.
Ooh, that sounds delicious.
Yeah,
we're going to have to try it when you open up your new restaurant,
That's
just a block or two away?
That's right.
Yeah, talk to me about when that's going to be opening.
So we're opening by probably like middle of December, but it's World Trade Center. Really excited. So it's our second one in Manhattan. We have one in Midtown. It's 18,000 square foot. The one in the World Trade Center is ground level. It will be about 5,000 square foot, so really excited to open that. Can't wait to host you there.
Now, you've experienced significant growth in recent years. We talked about over 90 restaurants worldwide, over 70 here in the United States. What would you attribute your success to, and how do you think you're going to continue this momentum?
We scale our culture first by really investing in our people. A lot of training, because this is an art form that is unique to us. We're the category leader in it, and we are scaling it globally. So when you think about how to do it well, to keep the authenticity, we focus on our human capital pipeline first. Now we have visibility of 3 years of sites ahead of us because we have 3 years of people, I would say talent ready to do it.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Let's take a look at how stocks are faring just about 20 minutes into the start of trade. The S&P 500 on track for a gain this week, a gain of at least about 1%. Of course, better than expected earnings continuing to take the stock market higher, including from marquee NYSE listed firms like Gap and Snowflake this week. As we get ready to set sail into the weekend, we want to spotlight one major event taking place on the water. The 2025 Sail Grand Prix slate officially kicks off tomorrow in Dubai, and that's not the only thing garnering excitement about the event. Yesterday, Rolex was officially named the first ever title partner of SailGP, with a 10-year pact agreed to by the two brands. Joining me now is SailGP's Chief Revenue Officer, Ben Johnson, who is in Dubai, where tomorrow's race is going to be taking place. Ben, we got to start by asking you, what is on tap tomorrow in Dubai?
Oh, we're a weekend of incredible racing. This is actually our first race ever with 11 boats on the water at the same time. So we have been building to a 12-team season, which will start for us in January in terms of all 12 teams on the water. But tomorrow we're going to see 11 boats racing for the first time. And for those of you that haven't seen this yet, this is not traditional sailing. These are high-speed flying craft. They look more like rocket ships than traditional sailboats. So 11 of them going 60 miles an hour tomorrow in Dubai is going to be really thrilling to watch.
From a revenue perspective, what makes this event unique?
Just the incredible local partnership we've built here with partners like Emirates and DP World to bring this event to Dubai. It's an incredibly iconic stop for us to have the Burj in the background, to have so many local brands and partners really making us not just feel welcome, but helping set a long-term vision for growing the sport in the region. And obviously, we're kicking off our season here. So we think it's a perfect place to have the attention of the world on us as we get ready to introduce new partners, introduce new teams, and get ready for a full season of racing.
How will we see the new Rolex partnership worked into tomorrow's event?
Everywhere. The short answer is Rolex is in the DNA of SailGP. We are incredibly proud to be entrusted with that brand. It's a legacy partnership for SailGP, and one that we have been working on for a long time. They've actually been a partner of SailGP since we first launched in 2018, but this is really the culmination of a lot of work we've done with their team to understand their long-term objectives, how we can bring our audience to bear both in person at the events, through custom hospitality, through unique experiences, and then our broadcast and social and digital footprints as well. So this is one that we are just extremely proud about, and it's the largest partnership in the history of the sport of sailing. So I think it's really a testament to both organizations seeing not just where we are today, but the vision for what we can build together over the next 10 years.
How can people watch if they aren't in Dubai this weekend, Ben?
So for those of you in New York, where we're actually based, tune in on CBS Sports this weekend. We have a great partnership with CBS Sports, Paramount Plus, and air our races on YouTube as well. For those of you that want to watch live on our challenging time zones this weekend for you New Yorkers. But for everybody in the States, we're on CBS and have a great partnership with CBS Sports Network and CBS Network.
And how do you track scores, structure, things of that nature? Who's in the lead?
The amazing thing, especially for all the new racing fans out there that have gotten into sports like F1 and other motorsports over the last 5-10 years, SailGP is immersive. We're close to shore. You can see the entire event up close. So the entire race takes place directly in front of you. We're really stadium racing. We're Central City. And in terms of scoring, we have 5 short format races, no more than 12 minutes. And then the winner of those 5, or the 3 winners of those 5 races, fight for the winner-take-all championship of that weekend. So we'll get down from 11 to 3 teams for the last race this Sunday. But before that, you'll see just crazy action with so many boats on the water at the same time.
How long is the season?
The season this year is 13 races. We have iconic destinations all over the world. We go from here in Dubai to Auckland next, and then Sydney will be in the US, in LA, San Francisco, New York. We've added new iconic venues like Rio and Geneva, but it's a 13 race season that starts now and will end in 12 months in November, back here in Abu Dhabi.
Ben, thank you so much for joining. I hope to be able to watch
so much,
over
Kristen.
the weekend. That's Ben Johnson. He's SailGP's Chief Revenue Officer ahead of the start of the season in Dubai tomorrow. We appreciate it.
Thanks for having us.
6 o'clock in Dubai, 6 p.m. we should say. We appreciate Ben for sticking around and joining us here on East Coast time in New York. All right, well, that's going to do it for today's live coverage. As always on NYSE TV, I'm Kristen Scholler in studio at the Stock Exchange. I hope you have a wonderful weekend. A reminder to our viewers, you can watch us on X, you can watch us on YouTube, you can watch us on the NYSE TV app as well, including highlights of all of our great content. So give it a look. Have a good one.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead.